Well, hello, traders and investors. I'm Ellie Little, and this is your weekly NeoTA broadcast, where we take a look at these markets, and we do it from a neoclassical perspective, asking ourselves each week what happened, what did the charts tell us in the supply and demand, and what does it tell us about the coming weeks. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. And if you want to take advantage, get updates anytime I push content, just reach up in the right-hand corner, hit the subscription button. Each time I push it, you'll get a notification. As far as what happened, here's the Friday numbers. We had a turnaround, push back down. We didn't maintain, which is kind of what I thought we would do, but by the end of the day, it was a pretty steady sell-off in Asia with the Nikkei, with the Hong Kong markets, continued pressure there. You actually had some push up in Europe. That was primarily as a result of dollar spiking higher, pushing the euro lower and allowing Europe to trade higher. Our markets down almost 1%, NASDAQ down 0.5%, NDX, and then finally, if we look at the dollar was up about 0.5%. So dollar pushing higher, markets pulling back some, and now the markets have actually entered into a critical area, and that is that they're on the ledge here. So when I'm speaking of the ledge, what I'm looking at is I'm looking at this set of price points right here all together, right? Basically with this swing point low, and there's another one back below it. Prices have came here twice. They've held. And as a matter of fact, if you look at it, you've got a bullish retest that's going to attempt to regenerate higher. But the problem is that this is the third trip down. So you come into it once here, push out, come into it again, all full retest, push out. Now you're in there a third time. Probabilities on a third time retest, regen situation, it's about 40%. So it's not even as good as a coin flip at this point. That says the odds are that this thing's going to try and break lower. It's going to get underneath the swing point high. And then that's going to say that this trend that we've had in effect this entire period of time, right, that's been going, instead of up, it's going to be sideways. And that's what a trend, a retest regen that is unable to regenerate, that's what it does, right? It tells you that the trend is about to change if it hasn't already. In this case, it actually has already changed once. And if we come back once more, you're going to break this and you're going to change trend again, and it's going to say trend is down. And so you're slowly, one more time, getting the rollover. And if we look at the weekly chart, right, that rollover is fairly evident. We saw the push down before, the push back up in August, back into November. That was the year before. Now the August rollover, now the push back up again. And so now the question is are we going to get another push to the downside? And actually, I pointed those out wrong. I wasn't looking at the charts right. Here was the August. This was the January. Now the question is, are we going to get the same sort of thing we got last year take place again? Or are we going to get the next push to the downside? And so that's the big question. To get a push to the downside, you need two things. Usually you need to break something of significant. If you look at it here, this looks pretty significant. You've also got the swing point low. And if you take and look at these charts, what are the charts telling you? They're telling you this is the significant area. That's why it's green. And so when you look at the charts, the TA Today charts are going to show you automatically where those significant areas are. The other thing that they'll do is they'll show you where the next level is after that. And it's a long way down. And so what it's telling you is that the risk to the downside is higher than the risk to the upside. In other words, your zone up here is just above. But if you break here, you got to go all the way down here to find something. And so from that perspective, you can see what your risk reward looks like from this perspective on the weekly time frame. So it's not as if you want to be loading up the truck. Yes, you can make some trades, especially if that level holds. But if it doesn't, your risk to the downside is a lot bigger than the risk to the upside. Where's the pressure coming from? Well, it's the NASDAQ. And as we talked about, Apple is broken down. And so the NASDAQ has had the hardest part in trying to push higher. And the NASDAQ has come off almost 5% now compared to the S&Ps, which is down a couple percent. So as the NASDAQ comes down, the NASDAQ's got some couple big bars here. It's going to trade into wide price spread bars. Those bars, the support zone has been drawn at the bottom of them. There is one here at the top. If that doesn't hold, right, expect the NASDAQ to trade down as well. If we look at what's moving all of this, of course, a big part of that is the dollar. And as we pointed out last week, the dollar is having a significant effect all overseas. If we look at the Shanghai market, right, Shanghai has continued to roll over, unable to lift. If you look at it on the weekly, it looks like it's going to come back and try to chest into these lows one more time. If we look at Hong Kong, right, Hong Kong was trying to hold on a bearish retest, regenerate. That did hold. So if we pull that chart up, you come up, you come into the swing point low, you get to the high of the low, you roll back over, now you're breaking down. You're going to target your swing point low again. So Hong Kong rolling over, Shanghai rolling over, Taiwan rolling over, the Nikkei struggling. It's all across the board in Asia. There's no lift whatsoever. And as this continues to struggle, that's going to put pressure in general across a big swath of the world economy, in particular in China. Now, if you walk over to Europe, it's not nearly as bad, and part of that, of course, is all the QE that's taking place in Europe. You had a nice reversal, less volume, right? Pushes back up, gets up to the top of the Draghi bar, that's 9995. You trade up to that level, almost to that level, you hold it at 99.50. The next question here is, can this push higher or not? The big bar, volume-wise, is 9961. Again, 9952 is where you closed. Germany looks to me like it's probably going to roll back over and try to trade lower again in the coming week. In France, if we look at France, it's weaker. Same sort of scenario. It's coming back into the bottom of the Draghi bar and failed on it. That also on a daily looks like it's going to trade down. Where's the targets on it? Well, if we look at this, just like we talked about Hong Kong, you had the same situation here. And that is that all this move higher off those January, February lows has simply done a bearish retest regen. The key area was the overlap of these two swing points. This swing point low and this swing point low is the high of this one, the low of that one. That overlap is right where price went to, unable to get higher, rolls back over. If you break underneath this swing point low, you're going to go for the lows again. And so you can see both in Asia and in Europe, pressure continuing to build. And then if we look in the U.S., as we've already done, that pressure is being parlayed back to us. Scenario for the coming week looks like more thrash at best, maybe some more potential rollover. And that's it for the week. I'll be checking with you from the road as we get through the week here, and nightly updates as usual. My suspicion is you're going to see this market struggle again in the coming week. Have a great one. Thanks for joining me. Take care. Good night.